Hello, and welcome to another edition of CMS Forex News. I'm market analyst Nick Nassad. Today is Monday, November 10, 2008. In Japan, machinery orders, excluding the volatile ones such as those for ships and electric power companies, rebounded in the month of September, climbing 5.5% on a monthly basis. The rise only partially offsets the major declines, however, seen in this index the last 2 months. The number of Australian home loans fell by 2.7% in September, which means that the interest rate cuts by the RBA do not seem to have filtered down yet to the housing sector in any significant way to help support new finance lending for home purchases. Stocks in Asia rose today as China unveiled a plan to spend $500 billion on a fiscal stimulus plan spanning over 2 years. The plan is expected to increase demand for commodities as much of its spending will go to infrastructure projects. The news helped boost carry trade pairs like the Aussie yen higher during the Asian session. However, as trading entered the New York session, risk aversion came back to the forefront as the Aussie yen slid 380 pips from its high near 69.40. In the Eurozone, the Sentex Investor Confidence Survey dropped from negative 27.8 to a fresh record low of negative 36.4 for November. This is the 5th straight month the index has been negative. This week's declines was a reflection of a weaker outlook in the auto industry, which has cut back production and work hours and looks to shed more jobs. In Switzerland, the Consumer Climate Index for October fell 10 points to negative 27, a 5-year low. Future expectations fell as consumers believe the economic outlook will worsen in the coming year. Stocks in Europe were up as well as mining companies led a rally. However, key indexes gave up some of those gains in later trading. The Euro-Swiss franc pair rose to test 1.5165, its high from last week, but was turned back in New York trading. UK factory orders declined more than expected in October. Output prices fell 1% on the month as oil prices and scrap metal costs fell. On the year, prices were 6.8% higher, but this was still a deceleration from September. The monthly decrease of 1% was the largest decrease since records began in 1986. Input prices were down 5.6% in the UK, but were 13.8% higher than in October of last year. That was also the largest monthly decrease and the sharpest slowdown in the rate of annual increases since comparable records began in 1986. The euro-pound pair has been very volatile the last 2 months. Today's price action saw the pair set a new record high above the 0.82 level. With the Bank of England aggressively cutting rates last week, the euro now has an interest rate differential advantage against the pound. U.S. stocks opened higher but were unable to maintain any of those early gains, with the Dow Jones index sliding into the red around noon. Risk aversion pushed the dollar-yen pair 180 pips lower than its intraday high near 99.50. In Canada, the annual rate of housing starts fell to 212,000 in October, but the number remains consistent with a relatively strong trend compared to other developed nations such as the U.S. and the U.K. Still, for the first 10 months of 2008, actual starts were down an estimated 1.6% compared to the same period last year. The new housing price index in Canada rose 0.1% in September, but slowed to a 2.1% pace in annual terms. The US dollar-Canadian dollar pair rose to the 1.1960 level in New York trading, retesting the level near Friday's high. Oil prices, though initially boosted by the Beijing stimulus plan, were close to $62 a barrel, similar to where it started the session. The turn to risk aversion in the New York session weakened the loonie in today's trading. Tonight, we get producer price data from New Zealand, the current account for Japan, the BRC Retail Sales Monitor and RICS House Price Balance from the UK, and the NAB Business Confidence Index from Australia. Overnight, Germany releases its wholesale price index, and along with the Eurozone, its ZEW economic sentiment. The UK reveals data on its trade balance and housing prices, while the US and Canada will celebrate Veterans Day and Remembrance Day tomorrow. And that wraps up today's news here at CMSFX.com. Thank you for joining us, and we hope to see you back tomorrow.